Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in this morning, markets weren't down as much as we thought based on the overseas or overnight type activity that everyone was talking about Sunday night. And right away, we tested the 200-day and the market failed right there. So there was a nice little short there. A lot of us were talking about it on the radio, and that's when the market weakened and we started to get pressured. And then we hit our lows probably around lunchtime-ish, somewhere around there. Bounced off the lows, gave some calculated entries, but then that's all it really was. The question is, if you're a professional trader and you're going to be at your keyboard all day long, you're going to have to really pick and choose what setups you want to trade. Pick and choose if you're looking for some cute little longs that you could trade on a 3 to 5 minute chart, or if you're thinking you can handle just being macro short until we get to levels that you think are compelling. I know I've talked about 1245 to 1255 and even 1210. Doesn't mean that we can't trade little macro or little micro, setups within that range, because we have to be here and that's what we do. You could also sit back and just say, I'm going to, short rallies and then add to breakdowns. But again, those trades are a little sometimes harder to find, so you need extreme patience. But overall, we opened up. If you take a quick look at the spiders, I'll show you. We opened up near, the 200-day. The 200-day was just say 131, or actually, let's see, the 200-day. 128.67. The high of the morning was about 5-6 cents higher. And then if you look more at the intraday action to see the type of trades you could have caught, you go to the 5 minute. So within the first. Within the gap, we had this gap down, or where are we? Actually, let's go to today. I'm sorry. I'm like a little messed up here with these charts. I wasn't here. This was your push off the open. Whereas, let's go to a 3 minute. You can see it a little bit better. Here was a push off the open, went up to right around the prior day resistance, which was also around the 200-day moving average. And then I know I talked, or you saw on the virtual trade floor, this is where I got short. Got short like right around this 128.40, and then those who are looking to add to your shorts added to it below the prior day low of which was like 128.16, and then this was your first move, okay, and the move took you all the way down to like 127.40ish. So if you shorted into resistance, maybe saw some things weakening, here was another short, there was your add, and then you covered along the way. Okay, or you could have waited to this one big wide range bar, engulf these two, and then said, okay, I'm done with that short-term trade. Then there was another trade. There was a trade that you could have caught from the long side, right here. Okay, I think I actually tweeted about this one, right when things started to look a little bit stronger, when high beta was acting better. We put a low in right here at 127.14. You had a decent move to the upside, held higher, not great. And then this is when it really started to get interesting, when I started to talk like, okay, let me get long something here around 127.55. And then if you did so, you had a nice move all the way back to almost 128.40. So if you were like tier 1, tier 2, sell some, I then trailed some, and then I think I got out of some right around here before getting involved in some again towards the end of the day. It's trading again after hours lower, but I took a little bit, which just for the mere fact that we tried to do somewhat of a reversal, and some of the stronger stocks had a reversal. Apple, there was a nice two-way trade. On the daily now, it looks like it had a nice bottom tail through this pivot. The pivot was 560.52, and just so you could see how things work, in the first few minutes of the day it was up. Most guys made the majority of their money shorting through this 560.52. You didn't know that it was going to go down to 548. You never know what's going to happen, but if you do the right trade, it's okay. And then you had actually intraday set up the other way. So you go to your 3 minute chart of Apple. You go here, okay, just so you could see it. Market, stock opened up. Let's go to the 3 minute. Okay, let's move it over again so you can see the intraday action. Let's go a little smaller time frame. So here was, first let's take a look at the 30 minute. You can see where the resistance was. So it opened up right here into the prior resistance. I was talking on the little radio around 9:20 that this 565, 567 would be some resistance, and that's actually where Laz mapped it out. So the reason being, that was a sell setup. Besides, if it broke through the low of 560.52, which was Friday's low, looking for continuation. So now you go back to the 3-minute chart, because a lot of us trade on that early on, and if you didn't want to sell into the strength, as soon as it started showing relative weakness, here was your short entry below the prior day low, which was 560.50, and from there, it was a clean move all the way down to 548. Not one real, pause. It paused right here, which I think a lot of people took it off because we talked about how 553 was a level of support. It slowed down there before, making another move lower. So if you missed this part of it, big deal. This was your nice cash flow short. If you were looking for cash flow, if you're trading intraday all day, if you're micro trading as well as macro positioning, and then if you had even a trailer and like just say covered tier 1 into this, and then this happened, you covered right there. But then really there was one more calculated trade that we talked about when Sperling went long, right around 555, if I remember correctly, right around here, and you'll see why it was a nice little setup. Here's your 555. So if you were still short from here, this was a decent spot. I know I talked about using 560s to pivot, but most short-term guys would have covered right around here. And then you look at this setup. Look at this nice little setup, nice tight, going sideways, started to constrict, and then 555. So here is your morning setup to the short side, and then in the afternoon, if you're looking for some type of bounce, seeing Amazon strong, Google a little strong, some strength, here's your 555, and look at that move. Pow, all the way up to 564. So here you had, let's make this a little bit smaller. So here you had, from the 560 entry, you had a $10 down move. You could have pick and choose when you wanted to cover along the way. And then from here, this long setup, okay, you had then from 555, you had a $9 up move that you could have, chosen your spots and figured out where you wanted to get out of it before. It actually even went higher than that before you saw this. If you would have seen this on a daily chart, you would have said, oh wow, look at that. Here's a little reversal tail. Now here is my out. Okay, and then it wound up correcting. And then I even think Sperling had a nice trade when he bought the dip here, and then it closed relatively okay. So all in all, calculated short, calculated long, and then there was just a lot of noise. So, guys that just chose the calculated trade did a bit better. And then Amazon was strong all day. Amazon didn't even think of pulling in. And then you go to your daily chart on Amazon. At this point, you did see a little bit of power here. I don't think you could just blindly short Amazon. Now, it had a little bit of a reversal, kind of powerful here, right? Engulfed the last 3 days. I'm not saying it's going to break this mini downtrend, but at this point, if you've been trying to short this and you've been leaning on it ever since it broke this area with this potent down day, or when it broke into the earnings gap, I would say this day is one of those days where you said, okay, let me give Amazon some space to figure out what the next, scenario is there. Google also, I wouldn't say had any real power, but all in all, we talked about this support level around 560 once it broke the 200-day, and it did get pretty close. So it held here, it filled the gap. I would say it has some room to, if the market bounced, to retest this area, 587, 591. Most guys got out of their stock when we broke the 200-day around 593, 596. Did save yourself 20 or so points. And then if you said, okay, I'm going to try it versus this level or try it versus this major level, it did show some relative strength, but it's still not compelling. Just something to, to look at. I think Baidu had its first up day. Nothing so, tremendous or to write home about. But all in all, if you look here, you did have somewhat of a day trade, right? When it tried to go below this low, it couldn't. It was strong all day, closed on the highs. So sometimes you get a little bit more. Even LVS, the piece of junk that it's been, not really. Came off the lows, but it's just still weak. Oh, you know what had a nice day today that people were talking about? Starbucks. Starbucks, as a leader, flexed its muscles somewhat today. This held prior support right here. Okay, it wound up becoming a decent 80-20 trade. It traded below this low here of 52.04, came back above it, closed pretty strong. So, this is above the 200-day moving average, and it's trying to hold the 100-day again. So it's pretty strong. This is something to watch, and it gave some clues that we could be a little bouncy today. Oil had its first up day. Not really going to say much about that except for it's been absolutely annihilated, closed strong, so it could try and fill this gap or even push a little bit higher. Some guys were talking about some of the stocks in the OAHs. You did see a bit of a tail, nothing so extreme, but I guess if you were short, nice little spot to cover, maybe you see a bounce. But again, in corrective type phases, if you're going to play these cute little longs and go against what's been a pretty tremendous downtrend, it could make you ugly quick. But if you're going to stay and say, I'm going to just keep shorting it until I see my prices to the downside, you better know you have that risk tolerance. Now today, gold didn't give you much follow through, but if you look at it in actual, and if you take a step back and say, okay, let me see how it absorbed Friday's move, not so bad. Look at the GLD right here. This was your big up day on Friday, inside day today. We would have liked to have seen some follow through. We didn't. You go to your 5-minute chart on the GLD. All in all, if you look, remember we started talking about this gap. I said if as long as it holds this gap, you're going to see some commitment, which was right here. It actually even held higher than that. If you look at where it broke out from that afternoon, it broke out from right around 156. Okay, this was 11 o'clock on Friday. So where'd we come in today? Basically the support from 11 o'clock Friday, so it didn't even get down to test the gap, so it's showing you some commitment. Not happening fast. People, it takes a few days to make a new trend, and right now gold's been caught in a pretty serious downtrend ever since the highs right up here. High, lower high, then you had this potent down day, and here's your intermediate trend again. So there's not much faith in here. I don't have much faith in it. I'm going to give it some space and see if I can stay with it. And as long as it stays above here, I'll stay with it. And then perhaps if it starts getting above this 158.31, you'll see a move to retest this 159. But for now, it's worthy of your attention. It's decent for a tier 1 long, but still gold has a lot to prove as it's still trapped in two different trends, the macro trend and this intermediate trend. Just because you had one up day where people flock to it on a down day doesn't mean you can go balls to the wall. Just have some. So with that said, we've corrected enough that things do look a bit cheap. And I would say that if you're an intermediate trader and you stayed short during this entire move, sent a tweet out, we talked about maybe covering below 1270. It might not be the perfect spot to buy, but if you're short, at any given moment now, you're kind of playing with fire. You made good money. You could have shorted at 1390. You could have shorted at 1360. You could have gotten short on Friday when we broke below 1295. So down here below 1270, yes, we can go lower, but it could take time. So covering made sense. As far as getting long, it could be a little wishy-washy. You have to only be a professional to do so. I don't think we're at the spot where you could put long-term macro money to work. I don't think we're at a spot where we're at the low of the summer. You can't be perfect. If you did sell also when you saw some of the signs, if you sold when we broke 1390 or on May 4th when IBD put us in correction, or you sold when we broke that 1360 area, or even sold on Thursday before the jobs number, and you do actively trade, maybe just not as active as us, you try a little bit in this area because no one's going to be perfect. And if you sold 100 handles ago, maybe you tier in a little bit in levels that you feel comfortable, not too much, and then wait for more clarity and wait for it to work for you, then you add. But for right now, market has so much to prove. The whole Greece vote is not for another 2 weeks. Our own Fed isn't for 2 weeks. Every day we're getting these rumors now about a coordinated effort or a banking union or whatnot. So it's going to be a little whippy. That's why when you get to certain levels that might not be, it will make it hard to be short and not a great long, just do less, stay flexible, and look for those intraday compelling setups like you do get a few times a day that can make you money in the meantime while you're waiting for more clarity for the macro picture to show its face. So with that said, it's Monday. I'll see you tomorrow with Brittany at the morning call. Have a good night.